Yo, what up everyone? I want to make a review of some trades that I took to end the week, along with some trades that we took as a community in my Discord, because there's tons of lessons that we could use as a foundation for trades that we may take in the future. The analysis that gets done in this video is the type of analysis which, in my opinion, every single trader needs to think about in order to trade successfully and consistently, and it has to be done on the spot as the market's developing. So there's going to be some good tips in this video. Before we get into the trades and all the charts, if you want a very good trading resource, I'm going to link my Instagram in the description below at Investotrade. I post daily trading recaps on here, along with very good trading tips and tricks that you're really not going to find anywhere else. It's a good resource, and you're missing out if you're not following it. Link is in the description below. But now let's get right into the trades. Wednesday, I took 3 different trades on QQQ. I first want to go over the pre-market plan just to get more context. Now, I post these every single day in the Discord of the levels I'm watching and potential setups I'm watching to unfold in the market. So NQ and QQQ, we weren't very bullish. There wasn't much to reference, and we were rejecting supply overnight with buyers failing to bring us higher. We rejected supply over here overnight. We also rejected supply yesterday, so we do have sellers factored in, and we have a very nice downtrend line signifying lower highs put into the market, which is not another bullish sign, especially with this rally right here failing, signifying weak buying. So we don't have any bullish signs in the market, and we don't have much demand until the 15579 area, which is much lower. They have to prove themselves to me. I said we're developing a small balanced range where no big directional trending moves will come when below 15697, which is the top of the supply zone all the way up here, or above 15622, which is this white line, which is our balance extreme low. So everything when the market is in balance, the top of the balance, I was using supply. The bottom of the balance, I was using actual bottom low. Anything inside is going to be noise, and you aren't going to get your crazy directional moves inside of balance. You have to wait for the market to come out of balance. So I was bullish at supply, bearish at supply, bearish below balance, or bullish above this balance extreme to the high. Now the first trade I took was a losing trade on QQQ. I want to break down what I saw and my stop loss, my reasoning for the trade. So obviously with the context, we are bearish. I did have a very bearish mentality going into the market, and it was very evident that sellers had put pressure on bulls, and bulls really needed to prove themselves. So what I saw in the market was we sold off to this little balance range and we consolidated here. This is going to be a major liquidity zone where the market's going to play games to try to trick shorts or trick longs into the market. So I really wanted it to develop and do its thing. We came into the zone and we made a move out of it. Now, just like what we saw in the pre-market action, we saw a failed rally from buyers to bring us higher. So on top of the larger picture context, intraday now we have some heavy selling pressure. We have a bounce at the balance and then a failed rally from buyers. So that's another good sign of weakness. As we started moving down, I played QQQ puts at the 952 candle just like this, anticipating a break below balance from that weak buying, targeting this 15579 demand zone eventually once we broke below balance and broke below the low. So now I'm in QQQ puts. I'm in the, I think, 381 puts, I believe. My stop loss was above this little high right here. So I was risking about 15 points on the future itself, even though I'm trading the options. It's just how I like to base my risk because I have a high risk tolerance. So my entry was there. We started moving down. And then boom, we break the low of the day. Now at this point, since my target is all the way down here, obviously we don't get it. But the first lesson I want to talk about, I say this in all the course videos, this has to do with my strategy and with the emotional side to trading, is you must be reactive to what the market tells you and the context. We broke below the low. You can see it on a 5-minute, you can see it on a 1-minute, and there was extreme buyer absorption down here at the lows, which is an extreme red flag if we are playing a bearish position or we're in puts or we're short, whatever. When you see buyer absorption, it's a very big red flag. And if you are a bear, you have to wave your white flag and react accordingly. Maybe stop out of the trade, get out for a profit, or boost your stop to somewhere where it's going to make sense when you react to what the market is giving you. You have to develop this deep relationship with price, watch it develop in relation with volume, and you can really gain a serious edge and understand the picture that the market is painting. So we saw heavy buy absorption here. That is a very bearish or very bullish sign. And as soon as we got above this high right here on the 958 candle, I got out my position. My stop was above this high, but because I reacted to what the market was telling me, I stopped out for a 10-cent loss. Not a big deal at all considering the next few trades, and a very small loss just being reactive. If I held on to my original stop, I probably would have lost about 30 or 40 cents. So you have to react and bend a little bit to what the market's currently telling you. Okay, that's the first trade. We got that out of the way. Now the second trade was based off of this. Same thing on the, go to a 5-minute chart. Same thing on the downside. It happened on the upside. So as the market bounced out of this balance area, we started moving up and we had very heavy seller absorption here. So now we have sellers factored in after buyers are factored in down here. We wanted those buyers to defend it. As soon as I saw the seller absorption up here at the high around 1020-ish, I started being more inclined to playing puts because of, go back to a 1 minute, let's go to a 2-day, because we saw another good sign of weak buying, and now sellers factored into the market, heavy volume to confirm it down here. And at 1028, I played the 381 puts at 62 cents. Show you what it looked like, just like this. So I saw sellers. We could argue my entry should have been a little bit higher, but I wanted us to go and assault this low where the buyers were factored in, because if they didn't defend it, we're obviously going to bleed a little more once those buyers do stop out and we start offering lower. We never want to bid higher when the buyers defend that. We always want to offer lower. So I'm in this trade now. I'm in the 381 puts. I'm in decent size because we saw some nice volatility earlier and I wanted this break below balance because that's when you get your nice trending directional days. So then we start selling off. Boom. Huge, heavy selling pressure. You could argue that these were the longs from earlier stopping out and the sellers maybe covering their position down here, which I did not want to see a rally. My target was at demand, just like the first trade. And then at 1035, I sold some of my position just to protect myself after an entry that was all the way up here. After a quick, 40, 50 cent move, you have to protect yourself, especially in this market. Those shorts could cover and we could start bouncing and rallying ridiculously. So I covered some of my position right here for a 55-cent gain on the contracts, got out at $1.15. And then I kept a couple contracts remaining just in case the sell-off wanted to continue into this demand zone, where at 1038, I sold my full position. I was comfortable with my win. Yes, you could argue that I could have squeezed a little more juice out of the lemon, but I will never complain about profits if you follow your plan. Some heavy volume coming into the zone, and this market could have easily reversed to the upside, and a 90-cent gain on the contracts, a, what is that, 100 and something odd percent winner, could have turned into a 20% winner if the market started bouncing here. So beautiful trade off that. We actually broke below demand, so now this becomes an invalid area. Just like this. And now I want to get into my third trade. So beautiful execution on that. That obviously wiped away my first loss. So it's all about risk management and all about trade management. Now the third trade was just like earlier. Heavy selling pressure, weak buying. I thought the same thing here. Heavy volume at the lows, yet buyers really could not take us back above into this balance area. So I started coming down. I saw this nice fat red candle to the downside. I took QQQ puts. At this point, I think I played the 379 puts or something like that. Started selling off, and then at the lows, we started consolidating. I got out for a 15-cent profit on this little move up after consolidation. My entry was right here. Just because I didn't like how price was reacting below low a day. Everybody knows what happens at low a day. It's not a good sign when we're trading like that. And then we got that quick push down. And just like we saw earlier, buyer absorption at the lows and a nice reversal. So there's multiple ways to do it. if you can develop this deep relationship with price and volume, it's a serious edge. It's the basis to my strategy. It's what I teach in the course. It's what members who have a lot of success in the Discord all do. If you learn this by experience, it's a serious edge and it goes a long way. And it's a skill that could compound you money for very long and very large amount of trades. SPY on Wednesday was also another great trade. I know some members that made some sick profits off of this. So just like NQ, we were having a hard time below supply. This one was at 451975 and the downtrend line. Below this, we're either going to balance or sell to demand lower, which was at 4499 or 4494. So looking at this chart, we had that same downtrend line, rejecting it overnight, and the market opened up, came right into the supply zone, heavy selling pressure, hit the downtrend line, so multiple confirmations. We also broke below this little other downtrend line or uptrend line intraday. Just get creative with it. Some nice candles coming in, some volume building. If you played puts at the supply zone, these contracts absolutely exploded 200-300% all the way into this demand zone if you took your profits there with heavy volume where we made a higher low and then started balancing and consolidating where FOMO hours are definitely in place by them. On Thursday, NQ and QQQ also had another great setup. We had supply just from Wednesday's action at 15660, 15674 as the upper extremes. We must reject these zones and hold below where I may look to play puts. We had demand lower that if we slice through it, we could see a larger sell-off into demand lower. I personally thought we needed to see more development, but it's all about recognizing the conditions and trading accordingly. So in the first 20 minutes, we opened up inside of the supply zone. We put in lower highs. We wedged, we broke the wedge, rejected supply, and started selling off. Now, the reason why I like playing QQQ and SPY, especially when there's large range days, is because the contracts absolutely explode. If you were to play QQQ puts at the supply, you could have got them conservatively, let's just call it 80 cents, 85 cents. And after the quick push down, these went up 100% in a 40-minute period where a $700, $800 investment could turn into $1,500. And by end of day, if you held to the lower demand zone, these went up 200%. So the power of options when there's large range days and clear direction where you could properly read the context of the market, it's so powerful and you can make a crap ton of money. We sold off, I think Biden was speaking around 115-ish, and that's what this large sell-off with volume is for. We broke below demand, so now this becomes invalid. And on Thursday, we closed right at this demand zone. Let's see what happens overnight. I'm not really too convinced with anything. The trade that I took on Thursday was Moderna, MRNA. Now, I normally don't trade this name, but a member brought it to my attention, and that a setup was way too clean. So there's multiple different ways to play this. I'm going to try to break them all down. I'm going to also explain how I traded it. The first entry could have been above the 438.50 area, speculating that demand was going to form if we got above it. We also had very heavy buying pressure down here at the lows in the first 15 minutes, which indicates new buying coming into the market as long as we create demand or hold. So if you missed the first breakout above this area, totally fine, but this is a valid entry point to get long. A second entry point could have been once this 438.50 acted as support and your risk was very minimal. The third entry point, which is where I entered, was speculating that we're above this demand and now new demand is forming above already an existing speculative demand zone in this area right here once we got above it and traded sideways. So at 9:58, I got Moderna calls. Pull this up here. I got the 450 calls at $4.40. The trade looked like this at this point. My stop loss was below this 438 area, which also lined up with VWAP. Now, not the best risk to reward standpoint, but it was a high quality trade, and I'm totally cool with that. Broke below the downtrend line, got above the 438.50, acted as support, and speculating that new demand was going to form. Stop below the 438 area, 438.50. And then immediately this trade started working out right away. I was speculating correct about about demand forming near the highs. And I made money on this trade. I'm not going to complain about it. But since we don't really have any clear targets, I was using whole and half numbers. 445 was a good target, and the 10.06 candle, I got out at $5.60 for $1.20 per contract. That's $120 per contract. You trade 10 contracts, you're making $1,200. You trade 100 contracts, you're making 12 grand. So quick trade. I was in and out in 8 minutes. I did leave a little meat on the bone. I should have scaled out some of my position and held for a larger move. But I took my profits when I did, especially with not a lot of target or supply or resistance overhead. This could have very well pulled back on me and I could have been screwed out of my profit. I also should have maybe bumped my stop loss up, maybe even held to 450, which it acted as resistance. And, these contracts went up. Let's see. These contracts went up to $10, 13 or $12 and 50 cents by end of day. So that's, what is that? 300% by end of day if I held. The third entry or the fourth entry could have been on a 450 break. I was watching the level 2 at this time. I normally don't watch it unless we're watching key level breaks. Everyone was watching the 450 area, some heavy volume through it. Maybe you could have got in before with your stop maybe below 448, but this eventually broke out and ran another about $6 and then $9 by end of day. So multiple different entries. With trading, you have to A, react to the market, and B, get creative with that reaction. Don't just sit there like a stone or like a statue, just sitting in place, waiting for the market to tell you, or waiting to buy something not based off of a reaction, because no one can predict. You have to react. There should not be any prediction in the market. But very clean trade. I'm very happy with that. Going in my journal, I'm going to review it this weekend. Friday was another crazy day. That same exact supply on NQ that we've been watching the past few days, that's been on our charts. Even from the pre-market plan today, we had a major wall of supply at 15660. That was just giving the market a hard time. That was the high today on NQ. And we sold off aggressively, voiding tons of demand zones to the downside, which is very good. Very large end of day sell-off. This is setting up for next week tremendously. And we have some heavy context that we could base Wednesday or pretty much all week's action off of as well. Same thing with the S&P 500. I mean, to the penny, we hit supply. That was the high of day. And we started rejecting to the downside and invalidating a bunch of demand zones. Now, why I love spying QQQ as long as there's volatility is because the option contracts, like I said, are so cheap. If we played puts inside of supply on the S&P 500, the low of the contracts, the exact bottom, no one's ever going to buy at the high or sell at the low, was 24 cents. And they went to a high of about $2.89 about an hour or so after. That's 1,100% increase on the contracts. And by end of day, they went to $4. That's a 1,600% increase. Same thing with QQQ. If we pull up the NQ chart, at supply, when the high was at the 15,660 zone, let me pull up the QQQ contracts. QQQ puts, just like SPY, were extremely cheap, and these exponentially exploded if you even caught a piece of that move. These went up 575%, and by end of day, these went up 1,100%. But even if you catch 20, 30, 40% in a minute or 2 minute type of trade, no one is ever going to complain about that. So very crazy moves this week. We're setting up for next week. Some volatility back in the market, some clear direction. This is where and I know definitely some members, will completely strive in. This is where we make the most amount of our money because the trades are the easiest and cleanest to read. So I think I'm going to end it on that note. If you enjoyed this video, hit the thumbs up button, subscribe to my channel, and if you truly want to learn more, be sure to check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord and no extra cost. But besides that, I'm ending it. Peace out.